control panel.
Hi traders, this is Senior Account Manager Adam Howes with the Daily European Open webinar for this Thursday the 7th of the 9th, 2017. Just a short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, so just a quick synopsis of the events that have happened today. We had the AUD USD gross domestic, the CAD Bank of Canada rate decision with a very surprise announcement of a 1% actual result against 0.75% forecast. So that's a 25 basis point increase on the Canadian dollar. In traditional fashion, the Canadian dollar gained value overnight, particularly against the USD JPY. We also had USD ISM Services Manufacturing Composite come in at 55.3% against 55.5% forecast. Tonight we're coming up to the European Central Bank decision, widely tipped to leave rates on hold at 0%. Coming up Friday, we have inflation data for the Great British Pound, a speech by RBA Governor Lowe, which it is a high impact announcement, but unless there's anything sort of untoward said or surprising, that should be a relatively flat announcement on the Aussie dollar. And of course, we see Canadian net change in employment and CAD unemployment rate at 22.30 on Friday, followed by the CMY Consumer Price Index, which has a direct impact on the Aussie dollar. So as usual, in usual fashion, we go through the pairs of the AUD USD and the Euro and the Pound against the US dollar, USD against the Yen. We have the gold price, which should be up here. Okay, so we've got gold just tracking here. We also have WT crude oil, Pound against the Japanese Yen, and of course the ASX 200. So relatively flat night on the market overall last night. The only real sort of impressive mover again was the USD CAD, or the Canadian dollar, generally against most correlated pairs. Obviously, if we go and take a look at the USD CAD, be able to clearly see sort of last night what occurred. Okay, we'll go to an hour chart here, and as you can see, bang on at 12 o'clock when the announcement came out that the Canadian dollar had a high interest rate attached to it, making it more valuable. It drove the US dollar down against a stronger Canadian dollar, so the USD CAD went down as a result. Very surprising announcement. The most inflation data and GDP data coming out of the Canadian economy has been good of late, and that has kind of supported a rate increase generally across the board. With that net change in employment and unemployment rate coming up on Friday, it'd be interesting to see if there's a significant variance from that amount, because if there is, then we'd expect to see sort of more bearish pressure resume for the USD CAD in general, and the Canadian dollar accruing against most currencies overall. Okay, so looking forward today, we'll just go through a few targets on the pairs today on the daily technicals. We have the AUD US dollar, which has a key resistance at 80.20. Further targets preferred of 79.60 and 79.40 in extension. We've got a pretty unimpressive day on the S&P ASX 200. Obviously a big bearish candle, probably in response to worrying US data. Further short positions preferred with targets of 5660 and 5643 in extension. The Euro USD continues to hold its ground, and there are long positions preferred today with targets of 1.1950 and 1.1965 in extension. Similarly, we have the buy preference for the GBP USD. Long positions preferred to targets of 1.3085 and 1.3115 in extension. Obviously, by design, if we're long on these pairs, then we're probably going to be short on the US dollar against the yen. And actually, surprisingly, though, the preference is from Trading Central is a long position to targets of 109.40 and 109.80 in extension. Now, I'd be pretty precarious with that sort of announcement because we've seen the bottom in the market tested, and we could very well see the resumption of a downtrend. So that's a little bit precarious to be taking that position on a downtrend at the moment. Probably advise that we probably rethink the strategy there and probably have a look at waiting for the market to make a move before we support longer or further long positions in the market. The pound against the yen has long positions preferred to targets of 142.70 and 143 in extension. Gold has bullish bias behind it with targets of 13.40 and 13.44 in extension. And oil, we have a rebound expected, bullish bias above 48.50, which is where the price is now. Further targets of 49.55 and 49.90 in extension. So just coming up tonight, okay, the key focus will obviously be on the euro with the interest rate announcement coming out, leaving on hold at 0%. The lackluster appeal of the US dollar of late is really sort of continuing to drive most of these pairs up, obviously on North Korea and on geopolitical risk. If you need any clarification on the trades discussed or anything else on the market, please be sure to get in contact with your account manager, whether it be myself or your respective account manager. Thank you very much for your attendance today, and we look forward to seeing you tomorrow at the next webinar. Thank you.